IPO Spotlight, Tata Technologies high-profile public offering. The much anticipated initial public offering of Tata Technologies, a subsidiary of Tata Motors, is poised to open on November 22nd, 2023 and is set to close on November 24th, 2023. The landmark event in the financial world marks as a significant step for the company, aiming to raise a substantial amount of 3,042 crore rupees at the upper price band. The IPO, notable for its sheer size and scale, consists solely of offer for sale by promoters, that are Tata Motors and its other investors. Now let me explain to all of you what is an IPO and what is the key eligibility criteria that a company needs to meet in order to successfully launch an initial public offering. When a company wants to go public with an IPO, it first gives out a word to its underwriters either privately or publicly. The company then selects the underwriters to handle the IPO. These underwriters help the company with all the steps of process, from research and paperwork to marketing and actually issuing the shares. To go public through an IPO in India, the company must meet these key eligibility criteria. Financial track record. The company must have a consistent track record of profits for at least 3 preceding years. Minimum net worth. A minimum net worth varies as per regulatory guidelines is required to meet in the last 3 years. Required net tangible assets. The company must have sufficient net tangible assets. Minimum average operating profits. There should be a certain level of average operating profits in the preceding years. Regulatory compliance. The company must be in compliance with the Securities Exchange Board of India's regulations. Minimum paid up capital. A certain amount of minimum paid up capital is required by the SEBI guidelines. In terms of specifics, Tata Motors plans to offload 4.62 crore equity shares estimated at a value of rupees 2,314 crores. In addition, investor Alpha TC Holdings PT Limited will sell around 97.17 lakh shares worth rupees 486 crore, and Tata Capital Growth Fund will sell 49 lakh shares amounting to rupees 243 crore. The company also embarked 20.28 lakh shares for its employees and 60.85 lakh shares for Tata Motors shareholders. Excluding the shares reserved for employees and Tata Motors shareholders, the net issue becomes evident. The anchor book, a critical aspect of IPO process, is set to open for a day on November 21st. In terms of IPO mechanics, the investors are allowed to bid for minimum of 30 equity shares with subsequent multiples of 300. This structure sets the minimum investment for retail investors at rupees 14,250 based on the low price band of rupees 475 per share, and goes up to rupees 15,000 at upper price band of rupees 500 per share. Tata Technology as a company stands out in its field. A global engineering services firm, it specializes in product development and digital solutions. It is recognized for offering turnkey solutions to global original equipment manufacturers and their Tier 1 suppliers. As a pure-play manufacturing-focused engineering, research and development company, Tata Technologies primarily cater to automotive industry. The company's education business plays a pivotal role in providing digital education solutions in manufacturing skills encompassing reskilling and upskilling in the latest engineering and manufacturing technologies. Financially, Tata Technologies has shown a robust performance. The company reported a 42.8% year-on-year growth in consolidated net profit at rupees 624 crores for the year ended March 2023. Revenue from operations during this period saw a 25% increase, reaching rupees 4,414 crores for the 6-month period ending in September financial year 2024. The company's profits surged by 36% to rupees 351 crores with a 34% increase in revenue to rupees 2,526 crore compared to the year ago period. The IPO is being managed by a team of seasoned book running lead managers, including Jim Financial, Citigroup Global Markets India, and BofA Securities India. Lincoln Time India has been appointed as the registrar for the IPO. However, the potential investors must be aware of the certain risks involved with Tata Technologies. The company's top 2 captive customers, that is Tata Motors Limited and Jaguar Land Rovers, account for approximately 40% of its total operating income, presenting a considerable revenue concentration risk. Additionally, the company's revenue highly depends on the clients from the automotive segment. There is an expectation of significant future revenue from new energy vehicles, many of which are startups. This poses uncertainties regarding their funding plans, product roadmaps, growth management, and potential ownership changes, which could impact Tata Technologies' business. Moreover, the company has experienced negative cash flow in the past and may continue to do so, potentially affecting its liquidity and operations. Lastly, the IPO's culmination will see the trading of Tata Technologies shares on the stock exchange starting from December 5th as per the IPO schedule. This listing marks as a new chapter for Tata Technologies, opening new opportunities and pathway for growth in the dynamic world of engineering and technology services. Sawad's investment advisory recommends a cautious investment in the most initial public offerings, often due to overvaluation concerns. Given the pedigree of Tata Group and the business potential, we are excited about the prospects of Tata Technologies IPO. We suggest avoiding looking at the listing gains alone and instead focus on the long-term prospects of business, which look strong in case of Tata Technologies. However, the decision to invest need not be made in a hurry, especially for long-term investors, as there would be an ample of time to invest post the listing. For a detailed recommendation, Sawat X subscribers can write to delight@sawat.com. For more informative content of this sort, do reach out to Sawat.